It is Monday morning, just gone 5:45. Really difficult to get up this morning. It is cold, it is wet, it is September and winter is probably here. Didn't sleep well at all, not quite sure why. Did my market analysis yesterday, so most of the job is done ahead of the 6 a.m. close this morning, and I've got quite a bit of a rush because I'm doing reading the newspapers for well, not reading the newspapers. I'm a guest on BBC Radio Nottingham, local radio this morning, to discuss the news and lots of other topics, which I do every month. So yeah, I've got to leave the house fairly early, a bit behind on the blogging, a bit behind on everything really. So not necessarily a good day, not necessarily a good start. Feeling a little bit, as I always do on a Monday, feeling a little bit unmotivated. But once I get into things, then we'll feel a lot better. But probably the hardest part of the day is the getting up. So that's why I need the coffee, which I'm about to make before I get into the charts and see what's happening this week. So just arrived outside BBC Radio Nottingham, about to go on air. Got to talk about a news article, and quite ironically, given the drive in and the bad traffic, bad weather as well this morning, I'm talking about, or I will be talking about speed cameras. I think speed cameras are a good thing, but I think when they are set up to confuse the driver, which inevitably they are, then whether they're a good thing or not would become a question, I think. So anyway, discuss that on the radio and see what people say. With all that said, it is day 56 of the 36-month Forex trading challenge, and yeah, I've done the morning market analysis. No trades to put on. I've written today's blog, so a lot of stuff done already. There were gaps overnight, so don't often get gaps in currency markets. They're a 24-hour market during the week, but at the weekend, between the Friday close at 10 p.m. and the Sunday open at 10 p.m, quite often, well, not actually quite often, quite rarely, in fact, there can be a gap in price. And what seems to have happened over the weekend, not sure why, there has been a switch into safe haven currencies. So safe haven currencies like Swiss franc, Japanese yen. Now, on my New Zealand dollar, Japanese yen long position, what this meant, there was a gap down. It went through my stop and triggered an exit about 13-14 points, I think it was, 12, 13, 14 points, pips below my entry. So it cost me, that trade was a loser. It cost me money. It cost me about 0.5% of opening capital. Is that right? No, not 0.5%, 0.05% of opening capital, where it was a fully protected trade. So if I'd have got out of my stop, then I wouldn't have lost any money on the trade. So a little bit disappointing. These things happen. It's one of the risks of holding a position over the weekend. Of course, it could have gone the other way. It could have gapped up, which would have been good. But, hey-ho, that's the currency markets. So having done the analysis, feeling a little bit better this morning. I've got Australian dollar, Japanese yen long and euro, Japanese yen long in play. I talk about in the blog post today, stgforex.tv. That's stgforex.tv if you'd like to read that. About, trying to put on this euro, Japanese yen long in eToro, which mirrors my private broker account. Couldn't get the trade away, couldn't get the stop position that I wanted. Not quite sure why. Still haven't fully fathomed that platform. And I've got a little bit frustrated in recent times with that, and also the spreads, and I kind of debated whether to actually stay on that platform. But the upside is, although the spreads are a lot worse than my private broker account, what it does give me is that interaction, which is not always great, but anyway, gives me that interaction that you don't get in the currency markets, or as a trader, because it can be a lonely business. So I'm going to stick with it for the moment. I've still got half of the month left. Looking at where I am this morning, I'm down, but it's all within risk tolerance levels, and trading is a game of risk, and you have to risk to get reward. Providing your risk tolerance is at the right level, then providing you survive, then you at some point going to thrive. And it's that one big trade that you're really looking for. In fact, it's not just one big trade you're looking for, because that would be silly, but you're looking for a number of big trades. Basically what I'm trying to say here is you're looking to hold your winners for as long as possible. So you're not banking everything on one big trade. I'm looking for a 45 to 50% win ratio, holding my winners for at least 2-to-1 reward to risk. So getting out losers quickly. I talk a bit more about fine-tuning my rules in today's blog post. So just basically, holding the winners, sticking with the winners, and getting out the losers quickly. And of all of the trading books that I've read, that's the advice. Cut the losses quickly. But obviously that is very hard to do, because we all like to be right. So anyway, talked a bit about that in today's blog post. I'm going to go and do the radio interview now, see how that goes. I'm then going to jump in the car. I'm not going to be back for the 10 a.m. close. I'll have a quick look at the candles. I'm then out at jiu-jitsu at lunchtime today, back for this afternoon session. I'll be back for 2 o'clock hopefully. So that's it. Let's go and do the interview. Okay, so it's afternoon, about 5:30, back from jiu-jitsu, sporting the jiu-jitsu branding today, and let me shut that curtain, can't really see. Just a quick update since coming back. 2 o'clock close. I put on a long in Australian dollar, New Zealand dollar, just showing that on the screen, which is progressing well. It's probably 1/3 of the way to target. I am now looking at any trade that I put on. I'm now looking to see, does it move my favor quickly within 3 candles? If not, is it putting my is it within my stop pressure tolerance? On winning trades, I know I can calculate on a 3-month rolling basis how much my winning trades kind of put pressure on my entry. This is what I call stop pressure. So I'm going to be monitoring that more closely. One of the things I realized is, and I keep talking about this, is that I've got to cut my losses short, and the methodology that I'm using at the moment, the 3 stages of exit, it's sometimes getting me out a little bit late, and I need a method to get out a little bit quicker. And if that means I take, quite a few losses for a very small amount, then so be it, because I'm saving my capital for the bigger trades and the trades that ultimately win the most. Because, I really hate taking a 2% loss, which is the amount of risk on any trade. I really hate taking a 2% loss. And I should say that I need to get my percentages a little bit better. I am a qualified accountant, but I did make a mistake earlier. On my New Zealand dollar, Japanese yen, the gap down cost me 0.5% of my opening capital, not 0.05%. So there we go. I was a bit distracted in the car just before the radio interview, so I got my numbers a little bit muddled, but there you go, 0.5%. Risk 2% on any particular trade. So got 3 positions on now. Got my Australian dollar, Japanese yen. It's kind of stagnated at the moment. I've got Australian dollar, New Zealand dollar long, and I've got Euro, Japanese yen long. Euro, Japanese yen long is not on any Toro. Couldn't get that trade on for whatever reason. They wouldn't allow me the my stop positioning, so I didn't put the trade on in that account. So I'm going to hold these positions overnight, see where we are. and we'll review again tomorrow. I'm going to look at the 6 o'clock close. Don't expect much to be happening on that, and I'll be up early again tomorrow to enter the market and start the day afresh. So it's Tuesday morning, day 57, and minutes from the, goodness me, finding it hard to concentrate this morning, pretty tired. The Reserve Bank of Australia last night, minutes of their meeting, last meeting, talks about rate cuts still being intact. That's kind of sent offers into Australian dollar pairs overnight. I'm long Australian dollar, New Zealand dollar, Australian dollar, Japanese yen. But I think this was pretty much priced in. I think this is just a small reaction and could be an opportunity for the bids to get positioned again. So holding, nothing to do at the moment on those pairs unless a signal shows up to tell me to lighten up. My euro, Japanese yen long, trading this on my private broker account, but not in eToro. That looks to be turning around now. Got to keep an eye on that. There may be a signal to lighten up. But for the moment, nothing to do. Done the morning market analysis. It's 5 to 7, and potentially quite a few opportunities that could show up today. So I need to be vigilant on the 4-hour closes to see what's what. The news at the moment, goodness me, it's all over the place. Canadian dollar up and down, linked to oil and what's going on in Saudi Arabia. People seem to hang on President Trump's every word, what he's going to do, what he's not going to do. We saw, in fact, the bids yesterday into Swiss franc and Japanese yen, safe haven currencies. Watching the news last night, can't be 100% certain, but it looks like that was linked to the oil thing going on in Saudi Arabia. Could be that reason. Could be just a risk off for the moment and then risk back on. Who knows? But there are these wild swings in the market based on news. Why I don't trade the news? I look for the signals, take the signals when they show up, and then hold the positions for as long as possible. So with all that said, I'm going to write this morning's blog post, which will be day 57. You can read this at stgforex.tv. Jump in the shower and get ready for the day. Good morning. It's a beautiful day here in the UK. It is Wednesday morning, and as usual, up bright and early to do the market analysis. I was really tired this morning, so I did what I needed to do. Went back to bed for half an hour, and I've just had a shower, got back up again. So just checked into the 3 trades that I'm in. Australian New Zealand dollar long, Australia Japanese yen long, and Euro Japanese yen long. And as you can see on the pre-recorded bit, I am in profit on 2 of those trades, and one of those trades is kind of teetering around the entry point. It's taken some heat, but is now just below entry, has been above entry. That's Euro Japanese yen. So we'll see what happens with that a little bit later on today. I am out and about today. I've got to drive to Birmingham to the NEC later on to present on LinkedIn to an accountancy conference, professional accountancy. So I'll be travelling down at lunchtime. Tonight, I'll probably just be back in time maybe, is the FOMC. So big news out of America, and the news article I just put up there says that the Fed is probably likely to cut rates. There was an article, I think it was yesterday, that said they were probably not going to cut rates. So who knows? Who knows? This is why I don't trade the news. As I keep saying, I don't have any US dollar positions on. I'm not trading any of the majors. So I'm not too worried about tonight's announcement. I am not going to get into any US dollar trades today. That's a gamble because it could go any way this evening. We'll see. We'll see. So yeah, not too worried about that. Just goes to show though, one day people say one thing, the next day people say another thing, and the market reacts. What I'm always looking to try and identify is the longer term trend, and the trend on the monthly chart is more powerful than the trend on the weekly chart, is more powerful than the trend on the daily chart, is more powerful than the trend on the 4-hour chart, which is not easy to say at this time of the morning. So I just try and look at that and to go with the trend, and know that I'm going to take a bit of heat on some of my trades based on the fact that I get in on momentum, and that's okay, providing certain levels aren't broken, providing the trend is looking like it's going to continue. So with that said, I've got a few things to do this morning, including practicing the presentation, and I will check in later, probably from the NEC. So all suited and booted, and just arrived at the professional accountancy show in Birmingham. Got my little talk today on LinkedIn for finance professionals. I use LinkedIn a lot, so going to share some ideas and some insight. I've absolutely no idea where I'm going. Such a big place, the NEC. The sun's out. I've got a 3-piece suit on, which probably wasn't the best idea. But never mind, you got to look the part if you're going to talk the business. So I'll go find out where I'm going and get ready to present. Got a bit of time to kill, so maybe a chance for a coffee, check the markets and see what's happening. So that was professional accountancy, just done the presentation on LinkedIn, marketing and all of that good stuff, and just having a quick walk back to the car now for the drive home. In fact, goodness me, sunny. Yeah, nothing's happened today really in terms of the currency markets. All seems to be quiet ahead of FOMC this evening, which kicks off in around about 1 hour 45 minutes. So yeah, in fact the most exciting thing that's happened today is somebody left me a negative comment about my drawdown on eToro. Drawdown is an inevitable part of trading. The month isn't closed, so hey, take it with a pinch of salt. But that's probably the most exciting thing that happened. So yeah, my trades are pretty much where they were this morning, as far as I can tell, on my phone. So we'll see what the FOMC does. This kind of news tends to trigger stops. Once stops are triggered, people start to panic, and fear is a great motivator for people to do something, to get out of positions or get into positions. So we'll see what happens. None of my current trades have a US dollar counterpart either side of the trade, so I'm pretty much insulated. So I'm going to sit back, watch the fireworks go off, and review where we are tomorrow. But for now, enjoying the sun. Goodness me, it is bright. Enjoying the sun, and we'll enjoy, hopefully, the drive home. So Thursday morning, day 59, and what a 24 hours, the last 24 hours was. FOMC came and went, 25 basis points cut to the interest rate, pretty much priced in by the market, so not much turbulence in US dollar as a result. I wasn't in any US dollar pairs, so didn't need to worry. Overnight, Australian employment news is out. Employment has gone up, but the unemployment rate has increased. So there were more jobs created, but the unemployment rate has increased marginally. So that sent offers into Australian dollar pairs. That stopped me out of my Australian dollar Japanese yen long. Part of that, I think, was due to Japanese news overnight, which I think was maintaining interest rates, maintaining their current stance on rates. So stopped out of that position. I've entered a couple more positions this morning. Probably best now to jump into the charts just to do a quick overview. Unfortunately, in a period of drawdown, a bit frustrating. Very confident in my strategy, very confident in my approach to the market, but facing a period of drawdown, as every trader does, it is frustrating, and just got to grind through it, stick with it. There's no point changing the system. That would be a mistake. So yeah, difficult time, and that's the real test of character, I think, in the markets. The markets will test your character and your ability to keep going when things maybe aren't going as you perhaps expected. So I'm going to plow on. Anyway, let's jump into the charts, and before I get on with the day, I'll review what's happened and what I'm currently in.
So first up, Australian dollar, US dollar, the Aussie. This is a trend trade strategy. So you can see we've had the predominant trend upwards, certainly for the last few days. Closed above the 50 simple moving average on the daily, and then closed down on that. That wasn't my signal, but kind of reinforces my position on this trade. This is the turquoise lines of the weekly downtrend, which if I jump out to a bigger time frame, you can see. So the pressure in the market looks to be down. Jump back into the daily, and then if I go to my signal chart, my 240 chart, where I execute my trades, you can see this was the activity overnight. This was the offers in the Aussie due to the employment news that pushed through these stops here. This is probably a stop run. We have the 10 exponential moving average closed below the 50 simple moving average. At that point, the 50 simple moving average was sloping upwards. Wasn't time for me to get in. There wasn't room to take a trade with the right reward, or a one-to-one reward risk ratio ahead of the 200 simple moving average. So my rules say that if we get a close below the 200 simple moving average, that's the time to get in, which I did here on the close of this candle. Slightly after, I was slightly late, but I was at a better price, so that was okay. So really looking to see where we close on this candle at 10 a.m. And looking for a push down here into the significant lows depicted by this black line. New Zealand dollar, US dollar. This is a trade that I am now out of. This was a trend trade strategy. I basically bought here on the close above the 200 simple moving average. We never really went anywhere, and came down and was stopped out. Into the synthetic pairs and Euro Japanese yen long. I entered here on this trend signal. This was the close above the 200 simple moving average on the 240 chart. We've then tracked sideways. We had this gap was filled. We then tracked down. This is kind of the intermediate trend line here, this thin line here. We've got a bounce there off the what looks to be off the 50 simple moving average. If I jump out to the daily, you can see a similar story. We've trended down, tested the daily 50 simple moving average, and have bounced back up. So although this trade is moving sideways, there is nothing to do at the moment. I think there's a really strong possibility that we're going to get a push up into this level, but as always, I don't know. I've got my exit rules in play should I need them. So here's that Australian dollar Japanese yen trade in my commodity synthetics, and you can see I'd added a second position here. We traced up to the top of the daily trend line and bounced down here, and we're looking to get some bids off this bottom of the trend line, which unfortunately corresponded to my stop. I think what I've learned from this trade is that I rolled my stop a little bit too aggressively. I could potentially still be in this trade, and this trade may push back up. So a note to myself that, if I am trailing a stop, what I need to do is to keep that trailing stop behind the 50 simple moving average, which it was, but also behind any trend line that is currently in play. And there's quite a definitive trend, I think anyway, as I see it, on this pair. So yeah, a little bit aggressive on the trailing stop. This was a winning trade, but it wasn't as big a winner as it could have been. So basically my initial position paid for the loss on my second position, which means that my reward to risk ratio was nowhere near what it needed to be. But again, another learning experience. Next I have Australian dollar, New Zealand dollar. So this pair suffered from offers overnight in the Aussie due to the employment data. So we're kind of testing this level here. We're not testing my stop pressure signal thing here, where this kind of tells me I need to start thinking about getting out. The fact that we've closed above this level, the entry level rather, is fine, so I don't need to worry too much here. If we get down to this level, we start to close below the 50 simple moving average, and the exponential moving average crosses over the 10 exponential moving average crosses over the 30, then of course I'll begin to lighten up on my position. But for the moment, I think we're okay. We're at the bottom of the daily trend line. We've got the 50 simple moving average for support. On the daily doesn't really tell me too much, so for the moment I think we're okay in this particular trade, and there's nothing to do. New Zealand dollar CAD. This was a trade I entered this morning on a trend strategy. On this, full house strategy, not trend strategy. So basically, what I was looking for was a signal candle underneath the 50 simple moving average and the 200 simple moving average. All of the SMAs that I look at on the weekly, daily, and 240 are above price action, which signals kind of bearish territory as I see it. If I jump out to the daily, you can kind of see this a little bit clearer. The pressure is down in the market. The only worry is the SIG level ones here. These are the it's the 3-year and 5-year low. Let's have a quick look. 3-year low, and 5-year low. So we may get some support, some bids off that, but if we get below that, then we could fall quite a lot further. So I've got my initial target just below the 3-year low, which is just north of the round even handle. So there's a possibility that we could get there. Then finally, New Zealand dollar, Japanese yen. This is a trade I'm now out of. It's kind of a similar story to Australian dollar, Japanese yen trade. I'd added a second position. We kind of went somewhere, but then we came back, trailed the stock pretty aggressively, this pair may bounce, although we've still got a close below the 200 simple moving average on the 240. So out of this trade was a marginal loser, but hey ho, it's the way of the world. I didn't lose a huge amount on this trade, so I preserved my capital for future. So although I'm going through a period of drawdown at the moment, what's important is that I keep executing my strategy, learning from my strategy, and continue to play the game.
So good morning, it is day 60 of the 36-month Forex trading challenge, and I am pretty tired today. It was a real struggle getting up this morning, but as has become the habit, lying in bed in the morning and thinking, should I have a lie-in? The benefit of a lie-in is just not worth the pain of how I'll feel later on, not having adhered to my discipline. So I got up, did the morning market analysis. I'm pretty glad that I did. A few little updates. My Australian dollar, US dollar short, I have now exited that position early. I have this new rule, which you can read about at stgforex.tv. It's not necessarily a new rule, it's just fine-tuning my early exit strategies. So basically, I have something I call average stop pressure. On my winning trades, I know from calculations, from keeping records of this, how far price usually goes against my position before going for me. I've added then 10 pips to that average, and that's my stop pressure plus 10 pips line. So if price goes beyond that in a trade that I'm currently in, it's a good clue that potentially this isn't a winning trade, because winning trades don't tend to reverse on me too much. So I have a number of specific rules that will get me out should that be the case. On Australian dollar, US dollar this morning, then I'd entered this on a close below the 200 simple moving average on the 240 chart. Price had then kind of oscillated up and down above and below this 200 simple moving average. 24 hours had elapsed, so this new fine-tuned rule is basically a time stop. If within 24 hours there's no paper profit in the trade, or there hasn't been any paper profit in the trade, I get out. And that's exactly what I did this morning, which allows my profitable trades to run, and if they pay off, then I don't have a huge loss or a 2% loss set against them. That's the name of the game. I've just on a 10 o'clock close about 50 minutes ago entered a short in New Zealand dollar, US dollar. This is at the 3-year low. We have been here before. This is where a little while ago there was a bounce and I was basically stopped out of my position. This is the second test, and there was a close actually below that level on a strong reversal candle. So I've entered. I've got very tight rules in place. If it doesn't start to play out, I'll get out. But sometimes you've got to test the water and see what happens. If things go your way, you stay in. If they don't, you get out. So I've got a number of trades on now. Profitable at the moment in those trades when you take them as a collective. Just watching and waiting to see what happens. I'm off out in about, goodness me, 45 minutes. I need to get ready. Off out to a networking lunch, so I'm going to be out of action. I won't see the 2 o'clock close, but I can monitor stuff on my phone. Doesn't mean I'm going to do anything. And then I'll be back this afternoon to see what's transpired. It is a pretty nice day. Apparently we're having a heat wave this weekend, so I'm going to make the most of this afternoon out and about at this event, and check in a little bit later to see how the week has finished. So lunch over, really good lunch at the Albert Hall, and now off back home. Get out of the suit, looking at my charts. It looks like most of my positions are in profit, so I'll be checking the 2 o'clock close when I get home and see where we're at.
So to finish up the week, a quick overview of the trades I'm currently in. First up, New Zealand dollar, US dollar, the Kiwi. As you can see, I entered on a full house strategy here. And on the week, if I go out to the daily, that's not very good. Let's just tighten that up. What you can see quite clearly is that we closed below this low here. On the end of the week, and that was the 3-year low. We're now approaching the 10 and 5-year lows, but I think if we jump out to the into the monthly chart, you can see that if we get below these levels here, and we're testing these levels now, there's a long way to potentially fall. So my job is to hold this trade as long as I possibly can. Into the synthetics, and on Euro Japanese yen, this trade under some pressure. I bought here. We've then tracked sideways and now broken down below this low here. I've exited 2/3 of my position and will possibly, depending on how the market opens, we are still above the 200 simple moving average on the 240 chart. Depending on how the market opens, I will exit 1/3 of my position for a small loss. If I jump out to the daily, you can see we closed below the 50 simple moving average, so the bearish intention looks to be back. What that means is I've got to get out early. The last thing I want to do is to hit this stop and take a 2% loss. So my signals are designed to get me out early and to get me out safely. Onto the commodity synthetics, if I can say that. Australian dollar, New Zealand dollar. I bought here. We've traded up. We've come down. We've not broken the 50 simple moving average. We then traded up. Got this Z reversal candle. No reason for that as far as I can tell. We still have room to get up to this kind of level, 1.1000. So just going to hold this and see where we go. And then finally into New Zealand dollar CAD. Again, this trade has benefited from New Zealand dollar weakness. It's a very similar story to the Kiwi trade, New Zealand dollar, US dollar. Yeah, if I jump into the daily first off, you can see we've closed below this level. We're now testing, or we've closed below, I should say, the 3-year low, and then it's the 5-year low here. So looking at the monthly chart, you can see if we get through this level here, well, potentially we could free fall all the way down to here. So this could potentially be a really decent trade, but yeah, only time will tell. Got the monthly 200 simple moving average starting to form here based on the number of data, the amount of data that I have. It looks like we've closed underneath that, so bearish intention seems to be intact. But as always, next week will bring another series of trading opportunities, trading signals, and my job's to trade the plan, execute in line with the signals, and patiently see what happens.